Guys, how we doing? I'm Ryan Mack. Welcome back to Trading Guys. Today, same as always, we are going to be running through weekly fundamentals. We may have a look here. Look, here's another example. If you watched one of my previous videos, in fact, I'll tell you when to go back to. 1, 2, 3, 4. If you go back to one of my videos between 4 and 7 weeks ago, you'll see that we already marked this up, right? I'm waiting for a deeper retest, to be fair, before I take that, because I want to take it more long term. However, if you're happy with the likes of intraday trading, then that's a perfectly fine thing to take, you know. But personally, I always wait for deeper retests. The only ones that I take short trades on, excuse me, is really gold. All right. Anyway, let's get cracking. So, as always, guys, notepad and pen out. Currency strengths: strong, weak, and then neutral, okay? I know if this is your first time watching the video, you'll be thinking that doesn't make logical sense. Logically, it should be strong, neutral, and weak. I understand that. The reason why we do strong, weak, and then neutral is because once we've worked out which currency pairs are strong, which ones are weak, excuse me, and which ones are neutral, we blank out the ones which are neutral, and we match up a strong economy with a weak economy, and that is how you decide what you're going to trade. So if one economy is strong and one economy is weak, let's say pound is strong, Japanese yen is weak, then you'd be like, oh, okay, I'm looking to buy GJ. That's how you know. You maybe hear it many times on loads of different platforms, people always saying, you know, plan your trade, trade your plan, you know, and you might be thinking, what the fuck, how do you plan for a trade? How the fuck, you know, if you're just looking at the screen and the market's moving, how the hell do you plan a trade? You know, and this is how you do it. You gather information, cold, hard, solid, economic, fundamental data. You work out which economies are strong, which economies are weak. You pair them up with each other, and that tells you right away if you're going to be buying a pair or if you're going to be selling a pair based on which one is strong and which one is weak, you know, which way they are around. Then, like, for example, let's just say pound is strong and Japanese yen is weak, right? So I now know, right, I'm going to be buying pound yen. But you come across here and you see this. Now, you can't buy that. There's no value to buy from that. You're going to buy it when it's way fucking, I don't like to say overbought, when it's way overextended. There's no such thing as overbought, really, because it can just go like that. It can come down here and just go fuck off again, right? So overextended. Or the best way to put it is actually it's expensive, right? The price to buy pound yen, that's the best way to explain it. It's expensive, okay? Because things can be cheap and can be expensive, but they can't really be, you know, overbought or oversold. I used to think that before I was fucking enlightened in the world of fundamentals, and I thought that's just YouTube nonsense. However, something that is 100% genuine is something is either very expensive or very cheap. Now, if you want to buy pound against the yen, you want to be buying pound when it's cheap. You don't want to be buying it when it's expensive, because then it's the higher probability of pulling back, right? So then we come across, just now I'm on the daily time frame. You can use this here. It's called the fixed range volume profile. If you want to find out where the main volume kicked in, so you just click on that, drag it here, and it shows you. You've got a green line here, right, where the volume kicked in. Now, what I do is, once I find out where our main volume kicked in, I pull this green line down here. So, what that kind of tells me initially is, for a really good trade, I want to be waiting for the market to go like this, to come back down, bang, retest here. The minute it retests here, if everything still lines up fundamentally, when it retests here, i.e. pound is still strong, Japanese yen is weak, blah, 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 then I'm going to be entering a buy right away here. And it's just going to go bang, 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 right? That's the kind of the main idea of it. However, you have to make sure when it gets to here that the fundamentals still line up. You know, if something happened that the pound was in shit state, Japanese yen was getting stronger, we were in a risk-off market sentiment and not a risk-on market sentiment. That means the Japanese yen is a safe haven currency, so people are going to move their money from risk-on currencies like USD, GBP, Euro, and so on, and they're going to move it across to a risk-off currency or asset, i.e. Japanese yen, Swiss franc, NZD, gold, silver, and so on, right? So you want to make sure it's risk off and risk on again, and blah blah blah, and the fundamentals line up, then it's going to fly. But if it got down here, right, and everything was like, oh my god, the pound is in the biggest hurt locker it's ever experienced in the last 5 to 10 years. Japanese yen, manufacturing is through the roof, services are up, employment is up, unemployment's down, average earnings are high, we're in risk off sentiment, then you're already down here, right? Let's just show you. Then, and it goes like this. You don't really want to be getting like caught out with that. What you'd wait to see is something like this, reject here and then go, and then you could enter it as it breaks here, right? But what you could find, and the example I've just explained with Japanese being phenomenal, risk off, pound being shit, blah, 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 is you may find it gets to here, comes back up, shoots back down, boom, boom. And in which case, we're looking, I'm just going to show you, to enter a sell right here, okay? Upon the break and retest. The previous support, once it's broken, becomes the new area of resistance, right? And you will see that time and time and time again, just to simplify things. However, as it stands now, I'm really looking for buys on GG, right? So one area right off the top of my head would be, see this right here? Wait, I'll zoom in for you, hold on. I'm just so used to it now, I don't even need the, to measure up. But I will measure up to show you. But look, you see this here? Small candle, large engulfing, breaks away. You mark up the small candle, right? Same as here, look. Here it is again. Small candle, large engulfing, breaks away. Now you mark up the small candle. Because we're looking for buys, we're looking to buy it as it breaks, retests, and away we go. Retest, just comes back and retests it again. It's fine if you get a second retest, it's fine. But look, it retests that small candle. Boom, and away it goes, right? Small candle, large engulfing. That's all you want to look for. And I'm in the higher time frame right now, right? This works on every single time frame. Doesn't matter if you're using the 5-minute chart, 15-minute chart, hour, 4-hour, weekly, monthly, whatever. This same principle applies. The small candle, the small white one, large engulfing. Now, if you mark that up and you were looking for sales, you'd be looking for it to break away, come back up, retest, and then melt. And you'd enter it here and you'd take it down for the sell, right? But because we already know fundamentally we're looking for buys, we're looking for these areas to be broken, retested, and then away we go, right? So once the previous resistance, i.e. the top, is broken, it becomes the new support, right? In line with areas of value also. Now, what is an area of value? Well, we have a tool, which you probably know. It's called the Fibonacci retracement. And many of you probably just look at that as a set of numbers, 618, the 500, the blah, blah, blah. And if it hits one of these numbers, I'll just show you, if it hits one of these numbers, then and it rejects and you can enter it. Well, yes, you can. However, what do the numbers represent? Well, they represent value. 382 is really shit value. There's not much value there. The 500, or 0.5, I just call it the 500, but 0.5 as it's shown here, it's okay value. And I know one of my good mates, he's a brilliant trader, has a huge account, and he'll always take a trade if it hits the 500. I don't usually. So bullshit value, okay value is a 500, 618, good value, 786, fantastic value, and then anything above that is like phenomenal value, right? So I always look for markets that come back into around the 618 area or the 786, right? You see that? So see this here? Like, I wouldn't have taken this. If this pulls up, comes back in, I wouldn't have taken this. I would have waited for it to come back down. Look, another one again here. Look, small candle, large engulfing, breaks away. Let me just mark it up and show you. Small candle, breaks away, right? It's in the area of the 786, which I absolutely love. Breaks through, boom, wait for the market to come back down, retest this zone, retests it, liquidity grab, boom, and away we go, right? It's phenomenal. You don't have to worry about head and shoulders this, a fucking fandangle blueberry shape this or that the other. Just look for the small candle, large engulfing, within an area of good value, which would be the 618 or the 786, right? And then you're going to take it. So as the market's moved up now, let's have a look. You've got this, I mean, right away, without even having to measure anything, here we go. Small candle, large engulfing, blah, blah, blah. However, it might not be value, might not be good value. Let's have a look. Now, people always say, should you do your Fibonacci from the pin or from the candle? It really doesn't matter. It really doesn't matter. It's never going to be that thing. If you have a pin, right, which is like that, you've got a big, massive pin, and then the market comes up, then you're definitely not going to pull the Fibonacci down to here. Why? Because you know that that's just been a big news move, which isn't a real move. It's just a news move, or it's just been a big, massive liquidity grab, and therefore, again, it's just a bullshit move, so you're just going to keep it up, right? So when people say, do I put my Fibonacci on the candles or the pin? You know, anywhere here is fine. There's no right or wrong. It's not going to make that much of a difference for you, okay? So, if we look here at this area, it comes into the 382. I wouldn't be trading that. There's another one here. Look, small candle, large engulfing, okay? You've got another one here. This is a cracker. Small candle, large engulfing, small candle here, large engulfing, right? So, the one that I'd really be looking to focus on in this scenario is this little one right here, right? I'd be looking to do that. Boom. So now, just tidy this up a little bit. What I'd be looking for is essentially this. Bish, bash, bosh. So I now know when this market hits here, I'm going to enter a buy. My stop loss will be below the previous low. I'm going to enter a buy here. Bang, bang. If it breaks away and comes down to here, I'm going to enter another buy. Boom. Of course, if I'm lining everything up, right, the fundamentals, risk on, risk off, and so on and so forth. But as it stands now, I would be looking to take a buy on GJ round about here. So you probably find it's going to go like this. Boom, 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 boom. Bang, enter. Boom, 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 boom. Right? You're probably looking at something along those lines. So I don't take the trade going down. Can you take the sell? If you think it's going to go from here to there. No, sorry, if you look here, you've got small candle, large engulfing again, right? So if you think it's going to go from here to there, Ryan, why wouldn't you just take the sell? You can take the sell. However, by taking the sell, you're taking a counter trend trade. You're going completely against fundamentals, right? And another thing, if you look here at the central bank rates, you'll see the central bank rate for the pound is 4%. The Japanese is at 0.50, so 0.5%, right? Now, what does that actually mean to you as a trader? Or what does that actually mean to the country as a whole? Well, this is the percentage rate that the UK will give an investor, i.e. someone who buys British bonds. If you're someone like, Elon Musk or someone with crazy amounts of money, and excuse me, or an Arab sheikh or whatever, right? And you want to invest in the UK, you would buy bonds, right? And by you investing in the UK, i.e. by you buying bonds, the UK is telling you right here with the central bank rates that if you invest with us, we will guarantee you 4% return on your investment, on your money, right? Now, when you're dealing with huge amounts of money, that's a lot of money. If you come across to Japan, Japan is saying to you, if you invest with us, we will give you 0.5% per year. So if you've got 100 grand in your bank, right, and you go to TSB, or your local bank, whatever country you're in, sorry, you go to a local bank and you say, if I give you 100 grand, how much are you going to give me per year? And they say 4%. You're like, okay, that's all right. And you go to the bank next door and you say to them, look, I've got 100 grand. If I give you, how much are you going to give me per year? And they say, we'll give you 0.5% per year. What's the first thing you're going to say? You're going to say, 0.5%? Why the fuck would I do that? The bank next door, your competitor, is going to give me 4%. Yeah, fuck that. Can you beat that? No, I can't beat it. I'm only going to give you 0.5%. They'll give you 4. Okay, well, obviously, where are you going to put your money? You're going to put your money in the bank that's just told you they're going to give you 4%, i.e., you're going to invest in the UK over and above Japan, okay? So that's why central bank rates matter in terms of bonds percentages when we're looking at this as well. So by you taking, this is the point I'm coming to now, by you taking a sell here, you're basically not going with the highest bank, the bank that's giving you the highest percentage. You've said to the little shitty bank that said, I'll give you 0.5%, you've basically said, I'll just take 0.5%. I don't want 4%. I'll just take your shitty 0.5% anyway. So by you buying Japanese yen, which means you're selling GJ, you're basically giving your money to a bank that's going to give you fuck all back. Why would you do it? Well, the answer is you wouldn't do that. You wouldn't do it. So I wouldn't take a counter trend trade in GJ. And again, like I always mention, the point and the whole kind of definition, if you like, of taking a trade is you want to be selecting a trade which has the highest probability of making you money with the lowest possible risk. You can never be risk-free, unless you move your stop loss to risk-free later, of course. But, I mean, to enter the trade initially, you always have to have a risk, right? So, but when you're taking a trend trade, that's just not a trend fucking line, okay? When you're taking a trade which is in line with the fundamental trend, which is in line with risk on, risk off sentiment, which is in line with institutional data and so on from the likes of Prime Market Terminal and all this other stuff, you're choosing a trade which has the highest probability of making you money, i.e. giving you a return, with the lowest probability of risk, okay? If you take a counter trend trade, you're going against the trend, this might just come to here. This, I've marked it down here. This might just come and it might tip this here. It might just come like that. Bang, boom. And just go. And you're like, oh, fuck, I waited for it to hit here. It never even came here. It just came to this line here, tipped it and flew, So by choosing to take a counter trend trade, you're choosing to take a trade which has the lowest probability of making you money with the highest probability of risk, i.e. the highest probability of stopping you out, the highest probability of becoming a losing trade. And you don't want to do that. You want to be selecting trades which have the highest probability of being a winning trade. Now, of course, you will still have some losers in amongst that, but you're keeping your losers to a minimum, right? If you start taking counter trend trades over the long term, I'm not talking about scalping here, that you can trade anything in scalping because you're only in for 10 pips or so, right? If you're going to take a counter trend trade, then yeah, you're just going to add to your losing trades and minimize your winning trades, and that defeats the whole purpose of trading. So that's why I don't take counter trend trades on the long term stuff, right? Do I take it in scalps? Yeah, because you're just in and out. Like this here, prime example. Boom, that closes. Could enter the trade. That candle comes to here, close the scalp, and you're done. So you could take it in that, but over the long term, no. Excuse me, I wouldn't be taking it. All right. So that's kind of explanation of that. Now, we're already on 17 minutes, nearly 18, so let's fly through this, right? I'm not going to give real in-depth explanations on all the stuff this time because we're quite into our time just now. I'll do that in next week's video, and I've already done it in previous videos, right? So the aim of today is to fly through this. What date are we on? 30th, okay. So let's have a look. As you know, I always cover one economy at a time, one currency at a time, however you want to say it. However, when it comes to AUD, China, NZD, I do all three of them together because they're all closely correlated. If China does well, AUD does well, and NZD. If China does shit, AUD and NZD will do shit, okay? So, bearish, bullish for AUD, that's year on year, so that's good. Construction work, bearish, official cash rate. Now, even although a rate cut is seen as bearish, I fucking explained this last week, but even although a rate cut is seen as bearish, it was already forecast to come in. And what's the aim of central banks? It's to get the central bank rates here as close to 2% or below as possible without crashing their economy, right? That's the aim. Once it gets there, it will then go back into being bullish, a little while later. So far, Euro's done that, NZD has done that, and Canada has done that. Aussie are trying, and USD and GBP are trying. They were previously at like 5.25, so they're trying their best to get it down, okay? But these have been quite successful so far. However, the Canadian economy is pretty shit. Retail sales Q on Q, bullish, 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 and bullish, okay? Now remember, when it comes to things like retail sales, core retail sales and blah, 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 it should always be bullish at this time of year. Why? Because it's Christmas. Okay, so that should always be bullish at this time of year. So we have to bear that in mind. It's kind of priced in, right? People are anticipating it, expecting it to come in higher because everyone's spending more money at this time of year. Let's see what we've got coming up next. Yeah, China, bearish. So just remember this, very simple. When it comes to manufacturing or services PMI, below 50 is bearish, above 50 is bullish. Okay, that's it. Very, very simple. So that's bearish. Next week we've got some news we want to see, but not much that we really care about. All right, so marking up. I'm going to keep AUD in neutral. I'm keeping NZD in weak because it's shit. And of course China we don't write down. Remember, if you want to put it in right now, CHF Swiss franc is in neutral. Okay, CHF is always in neutral. It's because we don't trade that based on economic data. We trade it based on market sentiment. If markets are risk on, what's this pair? If markets are risk on, we want to be looking to sell CHF, right? In layman's terms, to stronger pairs. And then if markets are risk off, we want to be looking to buy CHF, okay, in the kind of short term. Corporate profits quarter on quarter, bullish. It's getting better, but it's still minus. So it's, GDP 0.2. It's bullish, but I mean, remember overall, guys, the Canadian economy is still pretty fucked. It's not going to change anything right now. We need to see some good solid numbers over a good couple of weeks. Okay, so for me, Canada is still weak. Remember with the Canadian dollar, it's very heavily pegged to oil, right? So if oil, look, oil's still massively bearish, right? You can see I took a sell here. Could have held, I took it down to here and closed it. I could have held it longer, see, but you never know these things. And here's another prime example, right? Small candle, large engulfing, pulls away. Same again, look, small candle, blue, large engulfing, breaks away, comes back, retests that zone, and away it goes. Small candle, right? Large engulfing, breaks that zone. Previous support, once broken, becomes the new resistance. Bang, away it goes. Comes up for a second and a third retest, that's fine. Boom, hits that zone. Small candle, large engulfing, breaks away, comes back up, hits it. You can see it entered instantly, right here. Bang, away we go, right? Small candle, the blue, larger engulfing, breaks away, pull this across. That's the new support. Once the new support is broken, comes back up for the retest, candle close, confirmation, bang, in you go, and away you go. Small candle, large engulfing, breaks away, comes back up for the retest that zone, and away it comes. Just look out for the small candle, large engulfing. I'm telling you, it will change the entire game for you. I promise you. Just practice it, try it. You don't have to. Don't do it with a live account if you don't want to. Do it with a demo account, right? Paper trading, and write down out of 20 trades how many times it comes in. Doesn't matter which time frame. 5 minute, 1 hour, 4 hour, daily, whatever, right? Just make sure you're unbiased. Now, remember, if it breaks here, if it comes down here and doesn't reject and go, if you're looking for buys, it should come down here, reject and go. If you're looking for sells, remember you want to see it break here, come back for the retest. You take it upon the retest, okay? You don't take it as it breaks, because it could just be a liquidity grab and then away it goes. You need that confirmation. Retest doesn't go, right? So if oil starts getting strong, I use the word strong mildly, right? If it starts to pull up here, I would not be taking buys at all. I really want to see it hit here again, to be honest with you, and take sales from here because it's a good area of value, right? But if this comes up, which I expect it's going to, because it's a good area of value to buy from, yes, but I wouldn't be buying it, right? Look, it's a downtrend, so I wouldn't be buying it. I'll watch the market go to here or even go to here, reject, and then I'll take it for a long-term sell, okay? So my point is, if oil starts coming up here and getting strength, you might see some kind of strength within the Canadian dollar, but it's not real strength, guys, right? It's just, and in-term bullshit, if you like. So when you come back to a Canadian, if this starts coming up here, right, if oil starts coming up, and you come back to a pair like GBP CAD, you may start seeing GBP CAD come down and break down to here. Once it gets to here, retest, reject. Oil, when oil's going up, this is coming down, right? When oil then gets to the point that I want to sell it from, you'll probably find that it's round about here. At which point, I will then buy GBP CAD, and away it goes, right? It's just how the markets work. They're so predictable, it's unreal, okay? Next week we have got OPEC meetings. That's for oil, manufacturing PMI, labor productivity, unemployment change. Employment change, unemployment change, IV PMI. So we do want to see all these, okay? But it's not really going to change anything. So Canada is still definitely weak, in my opinion. CHF, we don't cover that because it's risk on, risk off. It doesn't change with data. Euro, I'm going to fly through this, guys, because we're already at 25 minutes and I've got a really long day ahead of me. Bearish. Don't be fooled that it's green, right? It's bearish. Look, it was previously 9.1. Oh, sorry, bullish. I'm talking shit. My bad. But it's still minus, so it's not good. All right. Stagnant. Still bearish, minus. It's kind of, when it's stagnant, you know, it's showing resilience, so it's still showing strength, right? If something is resilient, it's showing strength. It's not showing weakness if it's resilient, right? So that's you could say bullish, stagnant, bullish, bearish, bullish, bearish, bearish. So it's very mixed data, okay? Overall, I still think there's some decent strength. I would call it kind of neutral to strong, right? Or weak, strong. Weak, bullish, okay? Again, look, we've got some mixed data here. Even last week, it was quite weak. So, and here we've got some mixed data as well. I'm going to keep it. I'm going to I'm going to move it, because it's been strong for a couple of weeks. I'm going to move it to neutral, right? However, it's a neutral that, in my mind, I know is a kind of, in fact, you know what, fuck it, don't. Keep it in strong, but just keep it in your mind as a weak bullish, okay? Keep it in strong, but keep it in your mind as a weak bullish, all right? Next week, we've got tons of data that we want to see, so just be prepared for a big week. Potentially some good moves, some good catches, see what we get. Right, moving on. GBP, it's been showing weakness for a long time. Well, getting weaker, sorry, not weakness for it. It's been strong for a long time. It's been showing weakness over a decent period of time. So I'd already moved it to neutral. Last week, was that last week? Yeah, we didn't really have, what there? Aye, so we didn't really have much news. This week, what we got? Final manufacturing PMI, money supply, lending to individuals. So everything appears to have been dropping, right? BRC shop price index year on year. Want to see that. Nationwide HPI. That's like mortgage approvals. Mortgages approvals. Final services PMI. Yep. Yeah. So let's have a look. I'm going to keep it neutral. Okay, it's been taking a hit. And with all this illegal immigrant stuff and everything that the UK's been hit by, it's just not an investable thingy. Remember, when it comes to retail sales, guys, we are looking at them to be increased because it is Christmas and we expect we expect people to be spending money, right, buying presents. Moving on, Japanese yen. Let's have a look at last week. Bearish, bullish, but same. Bearish. Bearish. Don't be fooled that that's green and think that it's bullish. It's not. Previously, it was 2.6. Now it's 1.4. It's dropped by 1.2%. That's bearish. The reason why it's green is that it was forecast to be as low is minus 0.5%, and it came in better than they thought, better than they expected. So that's why it's green. But don't get caught out thinking, oh, if it's green, it must mean bullish. No. It was previously 2.6. It has dropped by 1.4%. That's really bad. So that's bearish. Retail sales, bullish, of course, it's Christmas. Housing starts, bullish. Okay, so mixed data. Getting better for the Japanese yen, but I'm going to keep it. I'm going to keep it in weak. Right, it is getting better, but we need to see. It's showing resilience, right? But you know what it's like. Every time we cover Japanese yen, it's weak one week, strong the next, weak the next, strong the next. It's like a yo-yo. You know, it just doesn't have any stability, strength, and that's what we really want to see. And it's not really investable as a country because they're offering you 0.5%. You've got all these countries, 4, 3.6, 2.25. You've got all of them before you would even consider that, right? So it's not investable for outsiders. Capital spending quarter on year. Manufacturing. We always want to see manufacturing for Japanese yen because it's a manufacturing country. 48, of course, it's not good. Household spending, I would expect to see that higher because it's Christmas. And I've been to Tokyo around just before Christmas, and it was fucking chaos. So, with people shopping and all that. So, yeah. It's definitely a big thing. So, yeah, for me, Japanese yen is weak. Last, but by no means least, guys. Yeah, we could wrap this up in under 35 minutes. I'm just going to fly through it. Bearish, bullish. Again, don't be fooled that it's red. It's increased, so it's bullish. It just didn't come in as high as they thought. So bullish, bearish, bullish, bearish, 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 but as expected. Bearish, bullish, bearish, bearish, bullish, bullish, bearish, bearish. Doesn't have an effect. Okay, so again, it's mixed data. It's really mixed data. Markets are really freaking wishy-washy right now, and you can see that on the charts. You can see it's just ranging. How many pairs are just ranging right now? It's shit. Fine for scalping, but I don't really like scalping. I do scalp gold now, but that's really it. OPEC meetings. Next week, yeah, we've got quite a lot of news for USD next week. Okay, so is next week not NFP? Why is next week not NFP? I mean, then you've got the non-farm employment change. Let's have a look at I can't see anymore. Okay, need to wait till next week. I don't know what that should be NFP, guys. The first Friday of every month should be NFP. Maybe there's a reason for it, why it's not there that I've forgotten about. So, is it timing? No. Jolts. Strange. I don't know why that's not showing up, guys. Anyway, yeah, that's pretty much it. I'm going to keep USD in. I think it was neutral, isn't it? I had it in strong. Yeah, okay, let's see. Strong. Aye, same as Euro. So Euro and USD I'll keep in strong. However, they're not really strong. They're like weak bullish, okay? So just bear that in mind. If we look at the indexes, like if we come across here to the dollar index, you'll see, look, so yeah, you get some bearishness, but you are also going to potentially get this bang, over time. So you just have to be aware. But of course, it might not do that. It might do this, so we have to wait and see. However, we have got higher highs and lower lows so far. We just need that test. We need it breaking above and a continuation. All right. So that is us, guys, for the week, the weekly fundamental. If you would like full mentorship, you can by all means come across here to you can go to the description below, and it's got our links to join our mentorship program. Daily mentorship. It's done live. There's trading chats. You can see the trade results. Look, we're always hanging away. There's one of our members, Alex. He made $731. Where is... In fact, I'll just go here. Trade results from last week. Here's Gary. Last week, £5,722. He started off with 350. Now 5,722. Gary again, 1,118. Who's this? Oh, Anthony. Smashing it. And again. Oops. Alright, and you can see, look, it's just full. Look, there's Gary. 3 days of learning how to trade. Right. Look. That's when he had 300 quid, and he's built it up. Alright. So if you want full-blown mentorship, we've got training videos, we've got psychology, Forex trading books, swing trade education. This one here, beginner videos, is scalp trading, trade reviews. So every single time we give you guys trades, we review it, right? Lee reviews all of the scalp trades. And whenever I take a long-term trade, i.e. a swing trade, I post it in here so you can copy it, you know. And the good thing is about swing trading, let's say I post this today, and you don't see the trade, you don't see the signal for another 2 days' time, you can still take the trade because we plan to hold it for the next 10, 15, 20 weeks, right? So you can still get into that trade as long as it's a decent area. It's not like scalping where you have to get in instantly, and if you miss it by 5 seconds, you've missed the trade. Absolutely not. Sometimes you can even see this a week later, and the price is still good enough for you to buy and hold it, right? So there's no rush with swing trading. That's why I like it. But yeah, I hope this is beneficial for you. There's tons of free stuff down below. I've got like free, I think it's trading rules I have printed off. I've literally typed out what's important on here, right? What's important fundamentally, and I've typed it out what it all means, so you can print it off and keep it by your desk and read it. And that's where you can, you know, self-teach, become self-taught. Yeah. Thanks for watching. If you find it beneficial, you can join us down below in the description for the full-blown mentorship over the Christmas period. There's not a lot of trades over Christmas, so if you want to join now and get your studying done over the Christmas period, that is the best way to do it. So I'll see you then. Thanks for watching.